be a quiz afterwards. Spelling counts, right?
Absolutely.
Let me turn off my time to go pick up my daughter alarm. There we go. Make sure that doesn't go off. So.
Right, we're going to get started here. Today we are going to be talking about everyone's favorite subject, taxes, 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 right? Many of you probably just finished filing taxes for this year. For some, that was not a pleasant experience. For others, maybe it was a little bit more pleasant. Maybe you got a little bit of money back. The government appreciates your interest-free loan for that amount of time if you overpaid, right? Before we get started, and today's panel is going to be a little bit more conversational than perhaps some of the others have been. So we're going to kind of be relaxed, and I'm sitting down as opposed to standing up at the podium, which I like better. So being down, I mean, I'm going to confuse people already. All right. I do want to say thank you to the Institute for Humane Studies and the Templeton Foundation, who have provided a generous grant to help fund these events. And they have been great partners to work with. For many of you, especially if you're in my classes, and I'll forward this on to Professors Cook and Montgomery as well, there is a survey that you can take afterwards that helps us continue to receive that funding. So if you would, when you get that, and it's just a quick online survey, you go in and fill out and answer a few questions, and that helps us continue to justify their investment into this project. So please do that once you receive one of those links to that survey. I'm going to take a few minutes just to introduce our panelists. I'm very pleased at who we have here to talk about these. I'm going to start right here next to me is Professor Janelle Montgomery. She is a certified public accountant and has been at Rose State College since January of 2013. She teaches college accounting procedures, financial and managerial accounting, intermediate and cost accounting, professional bookkeeping, and income tax accounting. Her work experiences include working for a small accounting firm, working for the state of Oklahoma, working for a nonprofit, the oil and gas industry, as well as operating her own CPA firm. So please join me in welcoming Professor Janelle Montgomery. Next to Professor Montgomery is Professor Alan Cook. He is an adjunct professor of political science here at Rose State College. Professor Cook earned his bachelor's and master's degree in public administration from Mid-America Christian University, correct? All right, awesome. In addition to teaching at Rose State, he has also taught courses at Oklahoma City Community College, Mid-America Christian University, and he is a member of Pi Alpha Alpha, which is a National Collegiate Honor Society for public administration and public policy students. In addition to teaching political science, he's also active in politics, and he owns a successful small business. He was instrumental in creating the online American government course at Mid-America Christian University, which, if I remember, was the first. Is that the first online government course in the state, or one of the first?
I'm not sure.
Okay. All right. Well, please welcome Professor Alan Cook. At our far end is Mr. Jonathan Buxton. Mr. Buxton is the Senior Vice President of Government Affairs at the Oklahoma State Chamber of Commerce. And he joined the State Chamber in 2012 as the Vice President of Policy Development and Government Affairs. He was promoted to the Senior Vice President position in October of 2014. In his current role, he oversees the lobbying efforts of the State Chamber and handles specific issue areas of economic development, taxation, and workers' compensation. Prior to joining the State Chamber, Jonathan served as a research and policy analyst for the Speaker of the Oklahoma House of Representatives. He is a 2009 graduate of Oklahoma City University School of Law and a member of the Oklahoma Bar Association. Prior to his time in the House of Representatives, Mr. Buxton worked in political campaigns, healthcare, and criminal justice, and he holds a master's degree in criminal justice and a bachelor's degree in psychology. Please welcome Mr. Jonathan Buxton. All right, so here's how I asked folks to to kind of present. Each of our panelists is going to have about 10 to 15 minutes, probably longer since we've down a panelist, so take your time. The students love it when we go long. They just can't get enough, so,
Oh, yeah.
you know. Professor Montgomery is going to help give an overview of the tax system here in the United States and talk about how the current structure is set up, as well as any other important thoughts that she wants to provide. Professor Cook's going to talk about some of the proposals, I think, at both the national and the state level regarding taxes. And then Mr. Buxton's going to provide a perspective from the business community on how they perceive changes in the tax code, either at the national or the state level. So we'll start off, each one will have about 10 to 15 minutes, like I said, and then we were going to open up to questions from you guys. So I hope you'll be thinking good about some good questions to ask. So Professor Montgomery, we'll lead off with you.
Great, thank you so much. Well, just to give a little bit of a brief history of how taxes even got started, and I'm looking forward to just the comments from the other panelists, but from what I read, according to our tax accounting, it started to help fund the Civil War, and we're talking about the whole income tax structure. And so at one point, this is very interesting, that around in the 1895, it was actually declared unconstitutional to charge income tax, for the government to do that. So, but then they came back and said, oh yeah, we're just kidding. So, of course, we've been paying taxes ever since then. It's been crazy. I'm going to talk about a little bit about our highest rates of taxes that we've had to pay. But for the most part, there are 3 types of taxes. And the first one that I want to talk about is the one that, well, we're familiar with 2 of them. But the first one is the progressive tax, which is based on your income. So the higher your income tax base is, the higher your taxes are. And so the second one that I wanted to talk about was, wow, my mind just went blank, right? So, no, but regressional tax. And the most common form of regressional tax is the Social Security tax. I know there may be people in here that are making more than $118,000 maybe a year in here. Oh yeah, good. So you must know that if you are working as an employee, that once you hit that threshold, because out of your paycheck, you have 2 main types of tax that come out of your paycheck, and it's 7.65%. You have your Social Security tax, which is at 6.2%, and then you have your Medicare tax, which is at 1.45%. Once you reach a certain threshold, the Social Security tax will actually go away. So, you know, like this guy back here who's making, you know, over $119,000, you know, don't come and ask for money, you know, all at once. But once he reaches that threshold, the Social Security tax will go away. So that's an example of regression, like regressional tax. And the Medicare, that one has no threshold. You're going to be charged. I hope I didn't scare him. All right. Hopefully, there is no threshold with the Medicare tax, so it doesn't matter how high your income is. With being an employee, they're still going to charge that. And another thing about that is that, and he'll probably elaborate a little bit more, but your employer has to take the same amount out that you do. And so that's typically that. And then the other one, it's called proportional tax. That's basically your flat tax. So that's going to be any type of sales tax. So if you go buy something, I mean, in Oklahoma City, it's typically 8.375% of tax. So it doesn't matter how much an item is, whatever it is, it's not going to increase based on the amount that you pay for, or the price tag on it. So I wanted to talk about that. One interesting things that I looked at as far as the progressive tax rate and the tax schedule is that, how many know, like, what's the highest percentage that they have for taxes currently? Yes.
39.6.
Ooh, yes. Oh yeah. That is great. Oh wow. Okay.
She was a minor.
Oh, she's okay.
She was.
That's amazing. Oh, wow. Okay, yeah. So we'll have to go ahead and give all credit to Professor Cook, for teaching you now. Oh, wow. Oh, wow. That's
okay.
Oh.
She was in my class.
Before, but he didn't teach me that.
Oh, yeah, it's already starting. Already
Wow.
starting. Oh my goodness.
Oh, wow.
I think she was absent that day.
That's probably what it was. Yeah.
She was absent, didn't pay attention, right?
Since I quit going to class.
Well, that is great. So yes, it is roughly around 39%. It's been that since about the 90s. Anybody want to guess? How about in the 80s, like in the lower and the mid 80s, how much the highest tax rate was?
15.
Somebody else. This is good. This is good.
I could answer this, but I'll let them try it. Yeah.
Okay, it was around 50%. Isn't that crazy? So now the highest tax rate, for the most, of course there's other taxes involved, but it's 39%, and back in the 80s, it was, over 50%. And then just think about this, 1960s to 1980s, how many want to guess how much our tax percentage was? Yes, it was 70%. 70%. Guess what? It gets better. It gets all the way better, right? So starting around roughly in the 1940s, all the way to about the 1960s. Anybody want to guess the highest percentage?
I'm a little scared.
90. Yep. So if you made over $200,000 and this was back in the 1940s, you were taxed 90, I think it was about 90-ish or 94, I don't know the exact percentage, but 90 what?
94.
94, that's what I saw, yes. Oh,
Yeah.
nothing. Yeah, yeah,
Well, it's only 94% on the money you make above 200.
yes,
Right.
Oh, okay.
yes. So, yeah. I know, right? Still, you're like, And the percentages were real long whenever I look, and then they got pretty simple around 1990s. They didn't really, and then now the tax structure is how it is. So I just wanted to bring out some of those facts. Maybe you guys are, intrigued by that. So that's all I wanted to sort of
Awesome.
share right now.
All right.
So
Very good. Professor Cook,
Yeah.
you're up.
Man, can I stand up at all? Is this-
sure,
You got me?
sure.
Let me check my phone. It's just hard for me to sit down and talk.
Not many professors bring their own fan clubs to these things,
That's
so
right.
I'm very grateful that you did.
I gave them
That-
extra credit if they would
Right,
choose.
yeah.
So.
Yes.
No, so I love this topic, and I think it's really important that we talk about tax policy, fiscal policy. So influencing the U.S. economy using tax policy. That's the essence of fiscal policy. And this is an important topic, and we don't talk about it enough, I don't think. And I'm glad we're talking about it today, and I'm glad you're here, and I'm glad you're interested. But most of the time, we don't talk about this, right? When's the last time you saw a Facebook debate, a heated Facebook debate, where you just can't wait to get off work so you can type your response to someone, right? Over tax policy. I mean,
some new Facebook friends because
I guess my friends are like, I don't know. But a lot of the Facebook debates I get in, I mean, it's about abortion or marijuana legalization or same-sex marriage, LGBT, things like that. I mean, social issues kind of are what press our buttons and kind of get us heated and get us passionate. But we don't sit there and just like hash out the latest, like fiscal policies coming out of Congress or whatever. A lot of times, and it's really important that we do. Because it affects us a great deal. And I'm not saying those other issues aren't important and that we shouldn't talk about those. They're obviously very important. But I'm glad that we're giving this topic some time because this is important. This affects us. This affects our lives. The government, and we'll talk a little bit about the U.S. government and the state of Oklahoma, but both are in financial struggles. They both are. And so how do we get us out of that? Do we cut spending? Do we raise taxes? If we raise taxes, do we hurt the economy? Do we lower taxes to try to spur the economy and create a larger tax base? I mean, what's the route that we're going to take? And we'll talk about that on the federal level and the state level. But this is such an important topic because we have financial struggles as a nation, right? Does anybody know what the U.S. national debt is right now? It's over 19. It's about to hit 20 any day now if you go to USDebtClock.gov. .org, it's about to hit $20 trillion. $20 trillion, that's crazy. And it gets worse. We're going to get to that in a second. But $20 trillion, does anybody know how big that number is? We kind of talk about, we throw out, 100 billion or a trillion or whatever here and there, we just don't even think about it. But it's a crazy amount of money. If you took a bill, $1,000 bill, one bill worth $1,000, who was on that bill? Was it like Cleveland or something? We used to have that, I don't know. Take one of those and take a 4-inch stack of those. You know how much money that would be? Be about $1 million. So if you come across a 4-inch stack of $1,000 bills, you have about $1 million. Okay, not $1,000 bills, but a 4-inch stack of $1,000 bills. Right, that makes sense. You have about $4 million, or $1 million. How high would that stack have to be for $1 trillion? You might know 4 inches is $1 million. How high do you think it would have to be for $1 trillion?
Like a couple feet.
Couple feet? 100 feet? 67 miles
Oh,
is the answer. 67 miles high, $1,000 bill stack. Let me put it another way. Does anybody know how long ago 1,000,000 seconds was? 1,000,000 seconds was 12 days ago. So if you were going to count 1 to 1,000,000, counting 1 digit per second, which would be pretty hard to do once you get into the big digits, right? 298,962. 290, right? I mean, that's going to get tough. But if you could, it would take you 12 days to count to 1,000,000. Who else, when they were 5 years old, set out to count to 1,000,000? I did. I'd never made it, obviously. But how long would 1,000,000,000 seconds be? How long ago would 1,000,000,000 seconds be?
A year.
A year? Good guess. If 1,000,000's 12 days. It's actually 32 years. So 1,000,000,000 seconds is 32 years. How long ago would 1 trillion seconds be?
Like 500 years.
500? It'd actually be 32,000 years.
Oh.
So if you were going to count to don't just call me Alan, don't call me Jesus. If you were going to count to 1 trillion, counting 1 digit per second, which you couldn't do, but if you could, it would take you 32,000 years to count to 1 trillion. And our national debt is $20 trillion. It's an insane amount of money, and we're accumulating it more and more. 8 years ago, and I'm not using 8 years as to say anything about any president at all. I'm just using that as a time frame because all of us can remember 8 years ago. Our national debt was about 11 trillion. So we've almost doubled the national debt. I say we, and I'm not blaming anyone. Really, if you want to blame anyone, blame Congress. Congress is in charge of money, right? They have the power of the purse. They've almost doubled the national debt in 8 years. And what do we have to show for that? Not much. In the last 8 years, we have had very little growth. In fact, in the last 8 years, we have not had growth that has been more than 2% economic growth in our GDP, more than 2% in 8 years. You know the last time that's happened since we've kept records in the United States? Never. We have never in the history of our country had a period that long where we had such little growth for that many years. So anyone who tells you the economy is flourishing is lying to you. They're selling you something. They're trying to get elected. Because we don't have very good growth right now. And we have a lot of debt to show for not much growth. You'd think with all that debt, we'd at least have an explosive economy, right? But we don't. But we're just getting started here. There's also something called unfunded liabilities. Do you know what unfunded liabilities are? Have you ever heard of this? Unfunded liabilities is basically future debt. It's debt that and I'm not talking about debt that we think we might get 100 years from now. I'm talking debt we already know about, money we've already promised to pay out today that we know we're not going to have the money to pay for. So this is future debt that we already know about. Does anybody know where our unfunded liabilities are, what range that is right now in the United States? How much?
30-point-something trillion.
No, more,
50 trillion.
more.
Like 100 something.
It's just over $100 trillion. Economists say if you were to add up every single currency in the world, convert them all to dollars, so take the euro, take the lira, the peso, whatever, I don't know. Take all those different currencies and convert them to dollars. In total, now it depends on which economist you talk to, but there's somewhere between $40 and $70 trillion in circulation in the world today. That means that right now the United States is on the hook for more money than even exists. And at some point that bill is going to become due. At some point we've got to stop spending. It's going to be really hard to ever get to that point because those candidates don't really go that far. right? Candidate walks up to the mic and says, hey, look, this is our financial situation as a nation, and we need to do some stuff to change this. We need to make some tough decisions. And it's going to require sacrifice on all of our parts. Are people going to rush to the polls and be all excited about that guy? No, right? He's candidate A. Candidate B walks up to the microphone, and I'm not trying to make a political statement. I'm just saying, candidate B walks up to the microphone and says, hey, everyone, I'll give you free health care, and I'll give you free college, and I'll give you free child care too. Who's going to get elected?
And a tax cut.
And a tax cut, right? Who's going to get elected? Right? Candidate B. And so at some point, the United States is going to have to make some really tough decisions because we have $20 trillion in debt. Now, the debt doesn't really matter at that much. It's manageable as long as it's a certain percentage of our GDP. And for a long time, through the 90s and the early 2000s was one of the best in recent time. Our debt to GDP ratio was like 40%. So we had a 10, 11, 12 trillion dollar debt, but it was only 40, 50% of our GDP. So it was manageable. It's like you as an individual making $50,000 a year and you got some credit card debt, but that's fine. You can manage that. But here we are, we're approaching 100% debt to GDP right now. So our debt is approaching what it may have already surpassed. From some figures, we've already surpassed our GDP. Once your debt surpasses your GDP, you get into some hot water. Okay? And it's really hard to kind of get that back. So I said all of that to say, how do we fix that? How do we approach this? And one of the ways that we fix it or approach it is with tax policy, fiscal policy. So Donald Trump, President Trump, right now, he's come out with his latest tax proposal. And he obviously has an idea of how we're going to get us in a better situation. And that's to spur the economy. He wants to boost the economy. He's going to lower taxes. I'm not advocating for this. I'm not saying this is good or bad. I'm just letting you know this is how it is. This is what he's proposing. He wants to increase the economy by lowering taxes. He wants to lower taxes on business. He wants to lower taxes on families, rich, poor, middle class, pretty much across the board. His tax plan would double the standard deduction for every single family in the United States to $24,000. If you've ever done taxes, you know that most of the time you don't itemize. You just take the standard deduction, which is kind of cool. The federal government just says, okay, we know you as an individual probably have at least $6,000 in deductions you could take. So instead of having to worry about taking those, we're just going to give you $6,000 off your taxes, right? Or off your income. A married couple's $12,000. Well, that's about to double if this plan goes through to $24,000. So that means every single family's tax burden will go down. What they show as their income will go down by $12,000, which means their tax burden will get lower too. I'm not advocating for this, but I'm saying this is the proposal. And if everyone has a little bit more money, then maybe they'll spend it, right? We won't spend it, we'll save it, right? We all save? No. We get more money, we spend it. And that's kind of the idea. If everyone has a little bit more money and if everyone can spend, if we can lower taxes on businesses, I own a business, I'm all for I don't know, I'm a little biased on that. Then perhaps those businesses can hire more people, can reinvest, can grow. And so his plan is if we can grow the economy, then we can get more taxpayers. And once you get more taxpayers, you can actually increase federal revenue. And I'm not saying this is true or not, and this is an entire new can of worms that we do not have time today to get into. But the theory is if you lower taxes, you boost the economy, you get more taxpayers, and you can actually increase federal revenue. This actually happened in the 1980s when Reagan lowered the taxes that she was talking about from 70%, and by the end of his presidency, the top tax rate was down in the 30s. And the federal government, after this tax break, actually increased their revenue, which doesn't make sense, but it actually worked. Now, I'm not saying this works every time. There's a million other factors that go into this, but this is kind of the idea that President Trump has. The other route would to say, let's raise taxes. Raising taxes, and both sides have risk. Both approaches have risk. The other side would say, let's raise taxes. Let's raise taxes on certain people, especially the rich, for example, or on businesses. The risk you have there is you have negative economic impacts and consequences. And you could actually hurt the economy. Right now, since our GDP is at 100%, our debt is 100% of our GDP, man, we got to get our economy going. We need our GDP to outpace our debt. And so that's risky. Donald Trump's plan is also risky. We can lower taxes, but we might not see an increase in federal revenue, and now all we'd have is more debt. So which way do we want to go? And there's two different approaches there. Oklahoma, as a state, is facing the exact same thing right now. I don't know if you guys know this. Oklahoma's, as a state, our budget's about $7 billion. We actually spend about $14 billion, but about $7 billion of that is kind of off the books. It's different money that comes from the cities. But anyway, the state government has a budget of about $7 billion. And we have a shortfall of about $800 million. And we've had the same shortfall. It's not $800 million every year. We've kind of had the same $800 million for several years now. And every year we just kind of move it around in different ways. And so, but here we are, we're still sitting here with an $800 million shortfall. So how do we get around that? We have a lot of problems in our state. We have education funding problems. We have roads and bridges are some of the worst in the nation. And so we need this money. We need more money, not $800 million in the hole. So how do we fix that? One of the proposals is to raise taxes on certain people, namely energy. Have you guys heard about this? I encourage you to go to the state capitol over the next few weeks. You're going to see some amazing discussions over this very thing. I was at the Capitol last week. I talked to several state senators. I'm good friends with a couple of state senators, and we talked at length about this right now. And they were kind of telling me their opinions and stuff. But it's really interesting. What they want to do right now is they want to increase the taxes on energy. And someone please correct me if I'm wrong on these numbers. But basically what we did in the past was an energy company, oil, natural gas, whatever. If they poke a hole in the ground to try to get oil or natural gas out, as soon as they poke that hole, the clock starts. And for the first 26 months, we only taxed them at 1% of the revenue coming out of that hole. And after 26 months, that went up to 7%, okay? And this worked pretty well for a long time. In fact, in 1983, for example, before the oil bust in Oklahoma, oil or energy accounted for like 75% of our state's income. I mean, and our unemployment rate was 1%. Times were good. Everyone had a job. The state had money, you know? Then the oil bust happened. And we didn't really fare very well with that oil bust because we weren't very diversified as a state. We got more diversified through the 80s and 90s, and so then when the recession hit of 2008, we were in a much better position to weather that recession because we were so much more diversified, and we only had a 5% unemployment at that point, one of the best in the nation. Now about 34% of our state's income comes from energy. And that's only talking the energy companies. If you actually were to add income from employees and from all the support companies and industries that are tied in with energy, it's even more, but 34% comes directly from energy. And now we've changed it recently. Now we charge them 2% interest whenever they are, a 2% tax, excuse me, as soon as they poke a hole in the ground for 36 months. So we increased it by 10 months and we doubled the tax. And that was a good start, right? And then it goes to 7% after 36 months. What they're proposing now, what some people are proposing, is that we raise it to 7% from day one. So they poke a hole in the ground, it's a 7% tax from then on out. This gets down to the core of this conundrum. How do we raise revenue without hurting the economy? Can we raise that tax without hurting the Oklahoma economy? Oklahoma is notorious for losing oil companies to greener pastures like Texas. Could that perhaps cause an energy company to leave? If we were to raise it, let's just say we raised it to 3% in that first 36-month window. So we were going to raise it 1%. That would give the state about $100 million more in income. Is that $100 million worth the potential economic impacts? And that's the question, and that's the question that state senators and state reps and state legislature right now are arguing about and are going back and forth. And trust me, I got to sit in a room last week with one of the senior-most Republican state senators and one of the senior-most Democrat state senators, and they had very different opinions on this. And it was amazing to be able to just sit there at a table with these guys and hear them go back and forth. And so what do we do? How do we approach this? And I don't know if anything is going to get done on that this year. I don't know. You guys may have better answers to that, but that's just something that's facing our economy. And we're talking about tax policy today. That's tax policy. How can we make our economy better in the state through tax policy? Can we do that will that be effective if we tax the energy companies more? Did that make sense? Okay, did those numbers make sense? Yeah. Roughly, what they say is if we raised it right now, we're at 2% for the first 36 months and 7% after. If we raised it 1%, it would be about $100 million in increased revenue. So in theory, if we raised it to 7%, it'd be about a $500 million revenue increase. So we can almost close that $800 million gap we have right now, or we get really close to it. However, if we raised it to 7%, would it be worth it? Could there be some unintended consequences that we couldn't foresee? And so that's kind of the question then. Did I answer your question?
Yeah.
Yeah.
All right.
No, okay. Sorry.
Good. Thank you,
Appreciate
sir.
it. No.
All right. Mr. Rux.
Well, thank you all. I mean, you've covered everything I want to cover, so we're done here. Now, I am Jonathan Buxton. I work for the state chamber, and in the state chamber, our primary job is to represent businesses and industries across the state. Large businesses, small business, oil and gas business, aerospace, all sorts of different industries. Chances are very good that the company that you or your parents work for is a member of the state chamber. So what we do on the government affairs division is we spend the majority of our time at the state capitol working with legislators to try to get them to pass policies that make sure that Oklahoma is the most pro-business legal environment and tax environment to be competitive. The fact of the matter is that we're not the only state with oil in the ground. We're not the only state with advanced manufacturing. We're not the only state with aerospace manufacturing. So we're always competing. We're competing against Texas. We're competing against Washington, where Boeing is located, and hundreds of other places. And so what we try to do is make sure that our business environment, our regulatory environment, and our legal environment are just the most pro-business, open for business type systems we can have. Right now, we're working at the legislature because we do have the $878 million budget hole. It is a structural budget hole. We've had that same deficit for many, many years, and it's a lot of it has to do with accounting, how the state classifies revenue, and so that's how we're able to fill it over and over again, is by reclassifying some revenue. It's not in the general revenue fund. It's one-time funds that just happen to come around every year. So, but it's kind of a fun way to do math, I guess. So we're trying to figure out ways to address that, and really for the first time in a long time, the legislature's having a conversation about tax revenue. We've got about 50 bills out there right now that we're monitoring, and that do everything from increased fees and licenses for some industries like vending machines, to the gross production tax is one of the issues, tax credits and exemptions, basically incentives that the legislature's put in place to encourage the development of different industries. For instance, the aerospace engineering credit was just reauthorized by the state for another 8 years. That's what we use to bring in companies like Boeing or Nordam or Northrop Grumman when they're actually hiring these engineers to do the aerospace work. So there's credits, there's incentives, there's actual tax increases like the cigarette tax. There's a $1.50 proposal that's out there right now. There's an increase in gas taxes of 6 cents per gallon. And then there's also some other ways that the state calculates taxes. And the number one bill I'm concerned about, that if I really wanted to make you suffer, I would describe it to you, has to do with combined corporate reporting. This is a tax policy that's been tried in some other states. It'd be very disastrous over long term, would not provide better, more consistent revenues for the state. And if you really want to be bored, I'm happy to go into it. But so that we watch all those bills, and we work with our members, and we work off policy that we've developed to decide how we're going to interact with those. Businesses pay almost 50% of state revenues, and so after you factor in your pass-through entities, for instance, small corporations, small businesses that pay income tax on their corporation as on the personal side, that number jumps up significantly. So businesses pay the majority of taxes in the state of Oklahoma. So we're very interested in all these different taxes and how they're going to be used to fill this budget hole. If you name it, it's probably taxed. It's probably the best way to start with tax policy in the state of Oklahoma. When you start looking at personal property, it's taxed. If you start looking at real estate property, it's taxed. Income is taxed. Sales are taxed. Trying to think of something else. Fur storage is not taxed, for those of you that are concerned about that. That's a sales tax on service, which was one of the proposals that the governor had in her budget. The governor's required to submit a budget every year at the beginning of session, and she had a proposal to tax services. And historically, tax services have never been taxed in the state. And so all of a sudden, you're paying a sales tax for your CPAs. You're paying a sales tax for your doctor, for your hospital visit, for fur storage, like I mentioned, and other things. And that was going to raise about $800 million for the state. Needless to say, there was a lot of concern about that. All of a sudden, if you're doing a project, say you're building a new headquarters for your company, if you knew you were going to have to pay a sales tax on top of the sales tax you pay for your lumber and your concrete and all that other stuff, you'd be paying a 6% sales tax for your architect, a 6% sales tax for your drywall guy, 6% sales tax for everything. So you just automatically stack 6% on. So the question is, does that type of automatic increase encourage or discourage business development? And most of our members feel like that would be a very dangerous road to hoe or a practice, and they want to basically take a step back. And so there's a few services that are still on the table, and the legislature really is looking at all sorts of revenue and ways to fill the budget gap. And like I said, this is really the first time we've had a serious discussion about revenue in the state of Oklahoma in a long time. And a lot of that is because of, in the early 90s, the state of Oklahoma passed a State Question 640. Does anybody here know what State Question 640 is? It was right after 39, right before 41. State Question 640 requires that the legislature cannot pass revenue-raising bills without a supermajority, 3/4 vote. So in the House, that's 76 votes. In the Senate, that's 36 votes. That 76 votes is probably about as close to impossible threshold as you can get. There are currently 71 Republicans in the Republican caucus. So in order to get to 76, you have to have at least 5 Democrats. And the Democrats are looking at every single proposal and saying, well, what do we get out of it? And so you've got a lot of that back and forth. And so a lot of the proposals that are out there, everything from the combined reporting to the gross production tax to the cigarette tax and the gas tax, is really a game of chess between House Republican leadership, Senate Republican leadership, the Democrat minority parties, and then there's also the governor who's going to factor in later on. So they're playing this game of chess, and right now it's much more, a lot more of people trying to throw over the chess table than people actually making smart moves. So it's really kind of a free-for-all there at the Capitol. But in the end, what comes out of these negotiations will decide how the state can fill our budget hole. And it'll also decide how the state is going to, be attractive to businesses. The businesses, what decisions they're going to have to make as whether they're looking to relocate to Oklahoma or expand their operations in Oklahoma, or for those that are suffering from the lower oil and gas prices, whether they can keep the doors open. So there's so many factors in play that the key to understanding tax policy is this: it's really, really simple. It does not get easier than understanding anything else, as long as you understand that tax policy is impossible to understand. So it's not impossible, but it's tough.
All right. I think one of the things I'd like to start off kind of just getting y'all's feedback on is a lot of times when we talk about tax policy, we don't think through, how will people react to this? And for example, or who will be impacted by a tax, right? The $1.50 tax on cigarettes. So we know that by and large, those who smoke tend to be at the lower income ranges. And so this is going to be a direct tax on those lower income households. The other thing that it just keeps playing in my mind is that if it's successful, i.e. if it discourages smoking, it's going to be an increasingly reduced revenue stream over time, right? It's not something that would be stable. And so either we don't really believe it will discourage smoking, or we're kind of putting a temporary Band-Aid on this, and we're going to be back looking for some other revenue stream in a few years when we realize this has worked too well and people are stopping to smoke. We often hear about paying, corporations paying taxes, and I'm gonna borrow from Harvard economist Jeffrey, Gregory Mankiw, who has a nice blog on this, and he talks about how the reality is corporations don't pay taxes, people pay taxes. And so when you're looking at when a business pays taxes, who's really funding? The business is just a revenue collection point. It's the point at where that money's collected and then paid, but who's actually funding those taxes? It's a combination of employees, owners, and customers, right? And so that's who a tax on a corporation actually hits. It's not necessarily. A business will look to try to recoup an increase in taxes by perhaps raising prices, but they're constrained in that. They cannot make up all that revenue. So it makes it, as you said, very complicated. And so as we're looking at, let's talk about the state's budget shortfall for a second. I think there is a realization that there's going to have to be some new revenue from somewhere. What's the starting point? What do we look at as saying, we're going to have to raise some revenue. Here's the best way to raise it with causing the least amount of harm to the economy. And I'm going to just throw that open and let you guys start with that.
Well, I think the governor and the legislature has been pretty adamant that cigarette tax is the lowest hanging fruit. Of course, it's lowest hanging fruit, but like I said, remember that 76. Don't forget that 76 votes. It's a next to impossible threshold. The current proposal for $1.50 would raise about $215 million. Research has shown that once you cross that $1 threshold on taxes, you actually see the reduction in smoking. So it is kind of a diminishing returns tax. You would get the $215 roughly for the first year, and then you start to see it diminish. And I think that that's one of the problems that a lot of legislators have seen with cigarette taxes, with the gross production tax, with corporate income tax. So a couple years ago, they passed a new bill that requires the legislature to only spend an amount that's determined by a 5-year rolling average. So when you get a really good year, you don't immediately run out and spend all your money, because that's one of the things that got us into this mess. And when you have a really bad year, you've got some savings from the good years. And so this new kind of revenue stabilization idea is something that we've been encouraging them to pursue. They've done it on the revenue gross production side, and on the corporate income tax side, it's probably something they should consider with the cigarette tax, because over time, you will see that reduction in smoking.
Let me ask this, on the personal income tax side. Well, income taxes are basically taxes on labor, right? Because that's how most of us receive our income. We know about capital gains. Capital gains is taxed at a lower rate, and maybe you'd like to explain why here in a minute, why we do that, or somebody else if you want. But it's a tax on labor. Is there a point at which a raised income tax, whether we're talking about the state level or the national level, reduces labor productivity? Is there a point at which people simply look for other ways of earning income that doesn't involve working traditional labor as we think of it? And if so, what does that mean? What's the threshold? You mentioned that the top marginal tax rate has hovered basically around 40% since the early 90s. Never falling below 30%, never going above 40%. That seems to be kind of at least a political happy medium. Whether it's an economic happy medium, I don't know. But people seem comfortable with that kind of range. Is that so that's the question: is if we were to raise income taxes beyond that, are we going to see a loss in productivity in the workforce? And
I really think it really depends on the person, just because there are some colleagues that I talk to and they say, well, I need to make sure not to put in this many hours because I don't want to get above I don't want to be in this tax bracket. But there's some colleagues that I talk to that open up businesses so that they can avoid some of the taxes, the individual taxes. And, that's just one of the, best ways that they see to create income is, if it's through a corporation or through a pass-through entity, because they're able to take any expenses related to that business and they're able to reduce their profit. And so seeing that with pass-through entity, depending on what it is, if it's an LLC or a sole proprietorship, So they take the revenues, they subtract the expenses, and they're with their bottom line. So that makes it, I guess it gives them a little bit more of a relief, even though that money is being spent somewhere. I guess they just don't want it to go towards taxes. And so I know that that's one of the ways that some of my colleagues see that I want to start a corporation, so I don't have to pay taxes individually myself.
Right.
But seeing that whenever you have a C Corp, instead of a S Corp, which is a pass-through entity, a C Corp means that whatever salaries, you're taxed on those salaries, but if you're own some of the corporation, that the corporation itself is going to be taxed as well too. So that's where they get the term double taxation. So if you do have a corporation, then that corporation is going to be taxed as well as your salary that you pay yourself from there. So
A million things. I don't know where to start. I mean, you had mentioned something about capital gains tax. I think there's a reason capital gains tax is lower than income tax, is because we want economic growth, we want investment, we want people for it to be profitable for someone to risk their own money to invest. And if we raise capital gains tax enough, that could harm, that could diminish people's desire to invest. Why would I go do this? Why would I risk my money when the government's gonna take, half of what I would make? You know what I mean? It would be the thought process there. So, and I think there's some miscommunication there too. I know I've gotten this discussion a lot where some people say the ultra rich, and I'm not defending the rich at all in any way, I'm just saying, but they say the ultra rich, they don't pay taxes, or Warren Buffett pays a lower tax rate than his secretary. And the reason why is because he doesn't receive a salary, so he's not paying income tax. What he's paying is capital gains tax. And if we were to raise his capital gains tax, might that have negative economic impacts if we were to raise that across the board? And so, I don't know what the thresholds are, and I don't know what research has been done of where we could raise that. I know there's talk on different levels of government of raising capital gains tax or lowering it. I think the current Donald Trump plan is to lower capital gains tax. Is that correct?
I think that's right.
So I don't know, but so there is a difference between income tax and capital gains tax, and that's a long discussion. But
Real quickly, just for those who might not know what we mean when we're talking about capital gain. So a capital gain is when you invest in something, an asset that grows in value over time, right? Probably the largest capital gains income anybody gets is from a house, sell a house, right? I buy a house for $250,000. 10 years later, I sell it for $400,000, right? And the extra that I got over what I purchased for it is considered a capital gains. And that's simplistic, but 40 years, this has been where the growth in incomes of those who are wealthy has exploded, right? Has been in the capital gains area, not in the wages area that we see, where if you look at that same group, their wages have tracked basically with wages of everyone else. And so, but yes, because there are optional transactions, right? Because I don't have to sell this house right now, they're much more sensitive to changes in tax policy than labor. You're not going to, if we raise your tax bracket 5%, most of you are not going to stop working, right? Because you have to feed your family, you have to pay tuition, all of these other things. Whereas it's very easy if they raise that capital gains tax on a business I want to sell, to just opt not to sell it. And so that's what we mean when we're talking about capital gains taxes, is the investment of an asset and then the sale of it later for a higher value.
And just to elaborate more on that's pretty interesting, because you see that the majority of the people that are taxed are just regular, income working, who are employees. And so, the government probably sees that and says, okay, well, this is how we're gonna get a lot of our income.
There's a lot of money there, right?
There's a lot of money there. So they have to hit the majority of the people. And so the people that are over here that are maybe more of the risk takers, they may invest into the stocks, the bonds, the businesses, or whatever else, you see those people are taxed at a lower rate, but there's a smaller number of people in that category. And so they have to look and see, okay, well, let's just hit the majority over here. And so I think that's, where that thinking comes in. Where can we get the most revenue? And they see the biggest pool of people that are, employees are gonna say, okay, well, let's hit those people first, so.
Well, and one of the things we've seen in Oklahoma is we have a specific tax deduction for Oklahoma source capital gains. So capital gains earnings from Oklahoma-based companies. So there's a lot of big towers downtown that give employees stock in Oklahoma-based companies. And so the state of Oklahoma, in order to encourage that and encourage those C-suite or any employees, my dad works for Devon, my sister works for Devon, they receive stock as part of their compensation. Oklahoma wanted to encourage that. They wanted to encourage more capital development in Oklahoma, because when you're getting stock, you're purchasing value, and you're providing money for those corporations to continue to exist when maybe cash flow isn't there. So the state of Oklahoma said we want to encourage this, and in between 2014 and 2015, or 2015, 2016, that deduction alone for just Oklahoma-based companies was $100 million. And so I don't remember exactly what our capital gains rate actually is, but there's a significant amount of money, and it's all held by those Oklahoma employees. And so it's one of those that we're really trying to encourage that capital investment. We want people putting money into our Oklahoma companies so that they can then expand, grow, or in tough times keep their doors open.
One last thing, and then we're going to open it up to, I know we have some people who are just waiting to ask some fantastic questions. But let me throw this out here as far as, you'd mentioned Social Security taxes. We have, as you mentioned, a progressive tax, income tax. Social Security taxes are basically flat. Everybody pays 6.25% up to that $120,000 threshold, right? And then you pay nothing beyond that $120,000. You pay no Social Security tax on top of that. How do these different systems impact how people approach what they're going to be doing? I mean, does it matter that Trump has proposed going from 7 tax brackets to 3? Does that matter? Is there a revenue impact one way or the other? And even if there is there a trade-off that makes it better whichever way it goes? Does Social Security, if we mess with that rate, does that impact anyone? I mean, Social Security we know it's going bankrupt, like the federal government is going bankrupt. And one of the things that we look at and we talk about is, well, we could raise the retirement age, or we could do what they did in the 80s. We could raise the Social Security tax a little bit and raise the retirement age a little bit. A lot of times we think in these numbers, but we don't think about what happens to real live human beings who are the ones paying those, right? And what impact that has on decisions they make about what they're going to do with the resources that they have. And so I'm wondering, just from y'all's perspective, what's the advantage of the current tax system? There has to be some advantage because we refuse to change it, right? I mean, we tinker around the edges with how many tax brackets or what the percentages will be, but there's been no real move to really structurally alter it. Oklahoma has a default flat tax. I mean, I know it's not, but I think at income levels over $2,000 or something like that, everybody's paying that 5 or 5.25%. Why is that different? Is that better? Texas doesn't have a state income tax. From your perspective, if we were looking at what's the best way to collect revenue, what's the best type of tax system, what are you looking at? What would you say? And Alan, I'm going to let you start because
Okay.
you're like, I want to jump in on that, right?
I just want to say, and maybe I'm unclear about this, but this is a good discussion to have, maybe a different day. But the fact that the Social Security tax stops at $120,000, it's neutral, because that person doesn't get paid out more. They get paid based on that 120,000. So I think there's an argument that can be made if we increase the limit to $1 million, anyway, if you make $1 million, you pay that much. That's true. Social Security would have more income for the time being. But what about when that person retires and now they will be eligible to withdraw based on what they paid in, which maybe they paid in based off 800,000 a year income, and they're gonna live for 40 years, they're gonna live to 110, withdrawing that much from Social Security. So I don't know if raising the Social Security limit would actually be beneficial or not. I don't know what the studies
Right,
have
the
been.
trade-off for the cap is there's also a maximum payout, right?
Exactly. Yeah, that was my
And-
point. I'm sorry
yeah.
if I wasn't clear.
No,
Yeah.
you're exactly right. So, those high income earners who are gonna get the maximum payout, but it's relatively low compared to what they're earning from other
Exactly,
jobs,
yeah.
right?
You're right, yeah.
Yeah.
So you get paid out based on the rate you paid in, basically. So does that make sense? Oh, anyway. But as far as alternate systems, and I know me and you have talked about this, James, has anybody ever heard of a fair tax? Now, I'm not saying this would work, and I know there's so many ins and outs to this, but a fair tax would basically be a national sales tax. So we could do away with the IRS. We do away with having to go to your tax person every year, all that stuff. You would just pay a sales tax on everything you buy. We'd have a sales tax. So imagine if everybody got their entire check. It's genius what the federal government did 100 years ago, or 90 years ago, whatever. When they said, how can we make people not miss their money, right? Let's just automatically take it out of their check. Because imagine if at the end of the year we actually had to, the government did not withhold from our paychecks, and at the end of the year we actually had to write out a check for all of our taxes that we hope we saved throughout the year. Do you think we'd all be a little more mindful of how the federal government's spending our money? Yes. So the federal government said, we don't want people to be mindful of how we're spending their money, so we want them to not miss what they never have. And so we're gonna just take that out of their paychecks, right? So imagine, and we even talk in those terms. When someone gets a new job, you say, hey, so what's your bring home? That's our vocabulary. What's your bring home? How horrible that has become something that we just take for granted. Oh yeah, my bring home is this. Imagine if we got everything. Imagine if every single person got 100% of their check. So payroll taxes, income taxes, that would all disappear, and the federal government would be funded through a fair tax or a national sales tax. Now, there is argument that this would be regressive, and there are actually plans to combat that, where you would have maybe even like a national minimum income, something like even Nixon proposed, where everyone would get a certain amount of income, and if you made below that, you would actually be reimbursed. You would actually be given money at the end of the year, almost like EITC now or something like that, to get you to that $30,000 minimum point or whatever it is. Anyway, there's a lot of different methods to try to combat the regressiveness of that, but it's kind of a cool idea, right? Imagine if we could get all of our paychecks every 2 weeks, and we have all that more money. I think immediately it would benefit the economy because everyone just got a pay raise. What happens when you get a pay raise, right? You put that money in savings. No, nobody saves it. We all go out and we update our kitchen. We buy new tires. We go out to eat. We go to movies. We take our kids to the Frontier City. We do stuff that enhances the economy. Now, eventually, I know it's all the same amount of money. I get that. But at the beginning, I think you would see an economic boost. And I'm kind of a fan of the fair tax. Neil Bortz, I don't know if you've ever heard of him. He actually has a book called The Fair Tax, and I would highly suggest that book if you're interested in that tax system. It's kind of interesting to talk about. Some people would say it's the most fair thing you can do. If you don't want to pay taxes this month, don't buy anything. Like this national sales tax might not apply, and some plans would say it wouldn't apply to diapers, to baby food, to formula, to basic groceries. And we're going to tax Doritos and Dr. Pepper, but we're not going to tax milk and cereal and whatever, right? There wouldn't be that national sales tax on the sales tax on the basics, so you could go months without actually paying taxes. But whenever you do go buy a new TV, or you go buy new tires for your car, or you buy a new car, or whatever you buy, at that point you're going to pay that sales tax. And in theory, now there's all different theories of how high that sales tax has to be to get us the income we have now. But in theory, you could set it at a point where the federal government would still have the exact same amount of income, but we would reduce hundreds of billions of dollars we spend a year just to fund the IRS. Right? I mean, was it like $40 billion increase in the IRS spending in the last 6 years alone to kind of deal with the Affordable Care Act? They are to hire 16,000 new IRS workers. The IRS is just this massive, and I'm going way too long here.
No.
But the IRS is just this massive thing, and if we can get rid of them, and every year you don't have to file taxes, you don't dread April 15th every year. Just you pay tax when you buy stuff. I think that's a pretty cool system, and I would love to talk more about it. I know we don't have time today, but yeah.
I got a question for you.
Well,
Okay.
hold on. I'm gonna
Okay.
let any of our other two panelists to jump in here, and then you'll get to be the first question, all right?
Great. That's a good question for real.
All right.
I would actually say that it's kind of feeding off the fair tax idea. The ideal tax policy is the broadest base with the lowest level. So you tax the most things at the lowest level. So for instance, if you're going to have an income tax, you tax everybody's income as low as possible. You tax everything you're selling at the lowest level possible. And so what we've seen over the years with the progressive tax system, with the progressive tax code, is that we tax some things at higher rates. So in Oklahoma, it doesn't really count, because if you are making more than $2,000 or $3,000 a year, you're paying at the highest level. But at the federal level, you have to get up there to be paying in that top income bracket. So that is the more money you make, the more you're taxed. And so ideally, your tax system would cover as much as possible, bring in as much of the item you want to tax. Either if it's sales, you tax all sales. If it's services, you tax all services. If it's income, you tax all income. You make it as broad a base with as low as rate. That's the ideal tax policy. Now, I've not yet found a state or a nation with that tax policy, but I've got some suggestions.
All right. Did you want to throw in anything, or are you?
No, I've been
All right.
enjoying,
All
yes.
right, very good. All right, so I've got two, so we'll start at the back, then we'll come to you, and then we're going to throw it open to anyone else who's got a question. So yes, go ahead.
Okay. So, just now when you said, when you don't, like, if you don't wanna be taxed, don't buy anything. Okay, so what about people that like coupon and they don't spend their actual money? Do they get taxed or anything? Since they don't actually spend their money, they're actually using coupons? Like, how does that work?
No, they don't.
They don't get taxed?
I mean, you only pay sales tax on what, 8.375% or whatever it is in the state of Oklahoma, depending on the city you're in, on per dollar. So if you don't spend $1, you don't pay. I mean,
Oh, so they just basically like tax, like they just get their food tax free and they ain't have to pay nothing?
kind of. With the couponing, yeah. Like if you buy $100 worth of food, and with coupons you can get that down to 40. You're not paying sales tax on the 100. You're paying sales tax on the actual money that you spent on the 40.
Yeah, right.
So the national sales tax, that would actually probably, I mean, couponing's kind of been kind of a trendy thing,
Yeah,
you
that's what I
know,
was wondering.
it would probably increase.
What happened?
People would be like, oh man, if I can save taxes as much as possible, yeah, definitely.
So essentially they get more money back if they live here for using coupons.
Yeah.
All right.
Okay, so I have two questions. I have one for Professor Greg and then one for Mr. Buxton. So with Trump's tax policy, wouldn't that also do things like pull people off of welfare because now they have jobs, decrease food stamps and stuff like that to like add more money into our economy in a way?
Oh, that's the goal.
Yeah,
That's the goal. I mean,
That's the goal, right?
I just can't sit down sometimes. The best thing you can do for a poor person is what?
Give them a job.
Give them a job, right? So if we can increase the economy, if we can have the economy grow and more jobs are created and better jobs, and I think part of Trump's plan is what he's trying to work in, is trying to bring the manufacturing base back, right? 30 years ago, you could graduate high school and go get a job at the mill, at the factory, at the plant, at the warehouse down the road, and you could provide for your family. That almost doesn't exist anymore in the United States. And the backbone of the middle class, the manufacturing sector, is shrinking at an alarming rate. So we need to take some steps to get the manufacturing back. Tariffs is one, whole new discussion. But also, I don't know, repeat your question. I just got off track.
Like do things like pull people off of welfare.
Oh, yeah. So that's, and if we can create the jobs, exactly. So not only do we get the the revenue,
from taxes.
but, I mean, people have jobs and now they're paying taxes, right?
And they're
And-
the state's paying government money.
Exactly.
And so then it would also be things like health breaks, what the government gave away, like in free financial aid, things like that.
Yeah, it's kind of a double benefit. Instead of them actually being a taker, now they're going to neutral and even past that to being now a contributor. And I'm not saying that in a negative way at all. At some point in our life, we've all been something, you know what I mean? Like we've all received in some way, but I'm just saying, yeah, the more people we can get that are contributing, that are paying taxes, I would say the better. But how do we get to that?
Like spending with like free insurance and stuff like that too.
Yeah,
And
So-
then my other question was, so with this tax on services, would that be like, so the people that are getting the services, their taxes would just go up at the end of the year? Cause that's what it kinda sounds like to me,
I agree.
is they would just pay that percentage of sales tax out of what they made all year, so they have to charge the people for it, and then it would just be added to their taxes.
Well,
Is that basically?
ish.
Yeah.
The largest tax collection agency in the state of Oklahoma is business. It is the job of the responsibility of the business to collect the sales tax from the purchaser. So the purchaser actually owes the tax.
Yes.
The person buying the service, getting the haircut, seeing the doctor, owes the tax. The business is responsible for collecting and remitting that tax.
Right. Yeah.
So currently, every time you go check out at Walmart, you can just thank them for being the tax collector. I wouldn't recommend it, that's kind of nerdy, but
You know my business,
Yeah.
and I have a service-based business.
Yeah.
So I don't charge like sales tax when people,
Because that's what my dad is too.
yeah, and so what, I hope this fails, because, I'm just saying, because I would then have to start charging customers basically a service tax or sales tax,
So you would just have to add the 6%, which would be the tax.
which is gonna make the price of my service go up. Now, it's kinda neutral, because every company that I compete with is gonna have to do the same thing, but,
But still, your business goes down,
Yeah.
you're gonna have to lower your base price to be competitive.
All right.
and we have parity in the state of Oklahoma, so where whatever the state taxes for sales, or sales tax, put places sales tax on, cities and municipalities can also tax those
So
things.
they can.
So your 6% is your state tax rate, but whatever your Del City or Midwest City or Oklahoma City
so
tax
they
rate
can
gets
go back
tacked
up
on
to
top.
6% too as well, if the state's
Yeah.
taxing 6%, they can say, okay, well, we're gonna go from 2% sales tax to 6%.
Not so much the rate, but what's taxed.
Okay, yeah, thank you.
Okay, did you?
Well, we had a question for Professor Cook. I was pretty much elaborating on her question, that if you thought that Trump would, the Trump proposal would pass, how much do you think that it?
man, I don't know.
How much is the percentage? 50?
No, it's better than 50. I think, I mean, it helps that Republicans control, if you like the plan, it helps that Republicans control the House and the Senate. However, there's a lot of different caucuses with the Republicans in the House, and they disagree on a lot of things, which is one reason the Affordable Care Act replacement stopped, because you couldn't get everyone on board. And it's kind of hard to do sometimes, so I don't know. It's still a pretty new thing, and I haven't heard much about it from all my contacts in Washington. I'm kidding, I have none. But like, no, I mean,
Aggressive.
like, so I don't know. It'll be really interesting to see, because this is kind of a big project that they have. And their goal was to get healthcare reform or repeal and replace done first. And so they could use that information and know what kind of climate we're gonna have, so that they could base their tax policy off that. Well, that didn't happen, so I'm not sure how this is gonna work. But I would say it's better than 50%, that something's gonna change.
Do any of you also have an opinion about this tax policy? Because I've actually done my reading on this policy, and I think it's actually a really cool, I don't wanna say cool, because I don't like taxation, but it's a policy, like most tax policies, I'm like, oh my gosh, this is stupid, but it's one I can kind of get on board with and behind. Do any of you have an opinion about it?
Honestly, from February to the end of May, when the Oklahoma legislature is in session, I have no idea what's happening outside the state. So,
I'm glad there's people like that.
yeah.
Do you wanna?
I would have to dig because I'm one of those, a little bit different, but as far as, and not talking about the government, Democrats,
Yeah, no, no,
Republicans,
no,
I'm more so, what side do I need to play on, really? You know, like, what side is really gonna be, you know, beneficial? And so that's why, you know, I have friends that say, hey, you know, go into owning your own business and, you know, sort of help alleviate some of the tax issues that most people deal with, so, yeah.
Can I say one thing? I want to make a quick comment about the legislative process. How many of you have siblings? Okay, a lot of you. How many of you could work together with your sibling to accomplish something that your sibling didn't want to accomplish? See, you should run for
Liars.
Congress. Yeah. So Congress is a lot like having siblings, and the legislature at the Oklahoma level is a lot like having siblings if your parents weren't there to make them behave. All right? So they've got varying interests, they've got different caucuses, they've got different goals, and the different, more than different goals, they've got different ways they think they can accomplish the same goal. And so I would say that, you know, 50-50 is probably a pretty good assessment because the Republicans do have control. But in the end, even within the Republican caucus, there's multiple caucuses. And so it's like trying to get your sister, and I have an older sister and a younger sister, and trying to get all of us to agree on something if our parents weren't there telling us to like each other. That's the legislature, that's Congress.
Instead of having one sister, you have 148 of them.
Right.
In the Oklahoma State Legislature, or
And they don't all
534 of them in Congress.
and they don't all live with you, and yeah.
Wow.
And remember, Trump's plan still is rather vague. We don't know what the income amounts on these brackets are gonna be. That could end up reducing how many people are paying taxes or increasing how many people are paying taxes. And it could increase or reduce how many people who are already paying taxes, how much or how little they're paying. So there's a lot we still don't know about that. Let me come over here and then I'll come back up. I've got one here. All right, go ahead.
I have two questions, one for, Professor Montgomery and for Professor Fitz. Why were the taxes so high from 1940s to 1990s, and what made them go lower?
World War
Yeah, World War II, right? So,
Yeah, war.
well, yeah, no, really. I mean, you had
Yeah,
World
it
War
was,
II,
yeah.
Korea,
Yeah.
Korea,
Vietnam.
Yeah,
Vietnam,
all
right?
those.
When we
Yeah.
passed the 16th Amendment in 1913, they actually promised the tax rate's never gonna get above 10%, and that's only gonna be for the super rich, right?
Wow.
Within a couple decades, we have the Great Depression, we have World War II, we have all these things that we gotta pay for that cost a lot of money. And before we know it, here we are in the 1950s, and we have a top tax rate of 94%. So, there's a lot of reasons, I mean, it's just, that's a ton of stuff, but I would say one of the biggest reasons that it got lowered was because of the nation's mindset from, we had a nation-centered mindset during cooperative and creative federalism through the 50s, 60s, and 70s, and then we kind of started to transition, and this is a whole big, long lecture that my students have been lucky enough to hear, but there was kind of a transition into this idea called new federalism, or back into state-centered federalism in the 70s and 80s, where, I can't sit down, and I'll just take 30 seconds here, where we're like, okay, all of these things that we needed the federal government to be big for, the Great Depression, the wars, civil rights, we needed the federal government to kind of step up and take control. But here we are in the 1980s, and things are kind of good, the economy's going right, and all those things are in our past, and our mindset kind of went back to a state-centered mindset. And we started to elect people, our elected representatives, and presidents, Nixon and Reagan, who had the same idea. And I think that's when you saw the tax rate start to taper, and especially under Reagan. When he came into office, I think the top tax rate was still 70%. When he left, it was down to 30, or something like 34, or something like that.
28,
And
got to
28,
28%.
28.
Yes.
Do what?
What did you do to make up for that difference?
Well, actually, and that's an amazing thing, and that's where this discussion gets to. Even after those tax cuts, you would think, oh, the federal government's not gonna have any more money. We actually saw increases in federal revenue, because what happened was when we lowered the taxes, the economy actually increased, became bigger, more diversified, the GDP grew, more people got work, the employment rate went down, the unemployment rate.
So were there any other things that you did along?
Oh, there's a million things that went into influence that the economy. I mean, you can't just pin it on one thing. I mean, there's no way.
But I was
So he could have just been,
stood out that also contributed
of why he lowered the tax rate?
No, like, as he lowered the tax rate, were there any specific things that he also did that helped, the economy flourish? Like, because,
Deregulation, I would say.
Yeah.
where that would go in, like, hand in hand with the,
Yeah, Professor Davenport, I mean, said it, deregulation, and typically that kind of comes with, and that's a conservative mindset, lower taxes and less regulations, kind of less government involvement, less Keynesian economics, we're gonna kind of have a step back and let the economy kind of do its thing. And for a while, that's gonna allow the economy to flourish. A lot of people on the other side are gonna say, yeah, you might see some gains at first, but there's gonna be consequences down the road, and some of them might point to the recession of 2008 and say, yeah, for about 20 years, we saw for 20 years, we saw the largest percentage of individual wealth of any nation in the history of the planet. The United States in the 80s and 90s saw more growth of individual wealth. I mean, we saw a boom. Life was pretty good, right? But did we eventually have to pay for that, and did some of those bills come due, especially with deregulation in the late 2000s? And that's what led us to the recession. I'm not saying they did or didn't, but that's the other side of that argument. Yeah, you can lower taxes and you can increase the economy, but are there gonna be consequences to that? Or you can lower taxes and deregulate.
and so another question
Sorry.
the, Trump's proposal that he would maybe twice back of what you were,
The
the standard.
standard
Standard
deduction,
deduction.
right, yeah.
So would that, cause more refunds as well? Or like at the end of the year where you get money back from your taxes, or would
It, it could, right?
Yeah, so, real quick, I mean, you have your income. This is the money you bring in when you're doing your taxes, and this is the dumbed down version I can offer. So this is not tax advice. I am a lawyer. This is not legal advice. You have your income, and then the state and the federal government let you deduct some from that income. And what the deduction is just a way to chip down how much income is actually taxed. That would be your standard deduction, itemized deduction, which are your mortgage, interest payments, and other things like that. And then that gets you to your taxable income. So your regular income minus your deductions gives you your taxable income. Beyond that, you get to things like credits, and those are actual dollar-for-dollar exchanges for the federal government. So, for instance, kids, you get a $1,000 kid tax credit. So that would be below the line. So that says that, if you have this much income, this many deductions, this is your net taxable income, but we're going to take off this $1,000 for your kids. So in Oklahoma, we actually tie our standard deduction to the federal standard deduction. And just today, they passed a bill to uncouple that, because if this proposal goes through, it would be about a $500 million hit to the state budget, because it would automatically double our standard deduction, and we could not afford that. So they're trying to decouple it and make it, leave it where it is today.
Interesting.
That is very interesting.
All right, did you have,
Yeah.
all right, go ahead.
About the fair tax. Okay, so it'd be a sales tax at the federal level. All that money would go to the national government, right?
Yeah, I mean, we would take the sales tax we have now, which is partly the state, partly your city, right? And then we would just add
Okay, that was my
federal,
question.
yeah.
Because I was wondering how it would affect local.
No, so you would still pay there, so instead of paying an 8% sales tax right now, you might pay a 20% sales tax on everything you buy, or 25% or 30%. I don't know what that percentage would have to be, and there's different plans out there, which sounds kind of high,
Right.
especially when you're buying a big ticket item. But if you think about, but you just brought home your entire check last week, and every 2 weeks you're bringing, so, I don't know, it's.
Hold on, I've got here, and then you still got yours at the back, all right, go ahead.
Okay, this is for anyone who feels like answering. Our national government is at such a deficit. Is it feasible for us to think that we could not only reduce or stop digging this hole that we've dug for ourselves, but to start trying to fill it in? Because as nice as the flat tax and the national sales tax sounds and could be, we all know how Congress is about passing drastic legislation. So is that even feasible?
the fair tax will never happen. I mean, it's just, it'll never happen, even with the Republican-controlled House, Senate presidency, it's never gonna happen.
But he likes to think about it.
Yeah.
Right.
But, man, but repeat your question one more time, though, because
Is it feasible for us to think that we could not only reduce the national debt, but
Oh, okay,
stop
okay.
spending, but actually like reduce it and bring it
you know, I don't know if we're ever gonna get to the point where we reduce the national debt. Because we would have to get rid of our deficit and then actually have surpluses, and that, I mean, you could count on like two hands the amount of times we've done that in the history of our nation. Like, we've had debt almost every year we've been a nation. I think the goal comes down to that debt versus GDP ratio. And if we can get that back down to 40%, so let's say we still have a 22, $24 trillion debt, but we have increased our GDP to now 30 trillion. It's at about 20 trillion right now, but let's say our national GDP, we can increase that over the next 10 years to 30 trillion. Well, now that ratio has kind of become more manageable. So I think that's how a lot of people look at it, especially in Washington. I think that's how Donald Trump looks at it. Maybe I'm wrong, but I think it's more of we're not gonna be able to get rid of this debt, but how can we make it more manageable? And if we can increase our economy, and if we can, you know what I mean? Then maybe that'll help. Of course, we wanna chip down at the deficit. 15 years ago, if we had a $300 or $400 billion deficit, people lost their minds. Oh my gosh, that's crazy. You know what I mean? We used to measure presidents' entire deficits for all 8 years in billions. And now we're having trillion-dollar deficits. I mean, it's just crazy the amount how fast we're adding to the debt. Because deficit is your yearly debt, and debt is the total, right? So we gotta reduce the deficits, you're right. I don't know if Trump's plan's gonna do that. I don't. Some people say it's not. Some people say it's gonna add to the deficit at first, and then maybe through economic growth, it might chip back at it, but I don't know. I hope that makes sense. I mean, I don't know if that's the focus of actually getting rid of debt. I don't know if anyone would actually talk about that seriously in Washington, actually paying down debt. I don't know.
Yeah, I was just gonna say, the majority of the debt that the United States has is owned by the United States. So we basically, governments can't go to the bank and get a loan, because we don't have JP Morgans anymore. But what they do is they sell bonds, and they sell these bonds, and so the government is saying, give us money your cash today, and we'll pay you money back in the future. So we own most of our debt. And so it's kind of a pay today for a hamburger you'll eat tomorrow, or eat the hamburger today for pay it tomorrow. Anyways, that's a Popeye reference for those of you that aren't obviously old enough to understand what Popeye is. So when I was in like 4th grade, I wrote a letter to then President Bush, George H.W., complaining about a $6 trillion deficit. That's how nerdy I was.
Debt.
National debt, yes, yeah, sorry, thank you. And so I think that we'll always use that debt to leverage. We'll leverage that because we really in a way need to. The amount of debt that the United States does not own is owned a lot by just normal citizens, but also by other countries that could not handle it if our economy collapsed. So it's kind of mutually assured destruction when it comes to debt. So as long as nobody says, I'm going to cash it in, then we'll be fine.
One of the ways where the debt affects you personally is the largest holder of U.S. debt is the Social Security Trust Fund.
Right.
And the U.S. government owes the Social Security Trust Fund like $4-point-something trillion. So we say Social Security is crumbling, Social Security won't be there when we get to that age. Well, it would. Problem is, decades ago, the federal government started saying, hey, we're having surpluses with Social Security every year. Let's borrow that money. But they never paid it back. So they actually owe, so of that $20 trillion debt, about $4.5 trillion of that is to the Social Security Trust Fund. So that's where it affects you directly, because your Social Security is going to be affected by that, by those.
Yes.
Just a question about the Trump's tax proposal. Is that almost the same as what the Stimulus Act of 2008 was supposed to be? It's supposed to have kind of the same effect?
The same, the goal is the same, the means, right? So in 2008, 2009, the stimulus package, both at the end of the Bush era and then the beginning of the Obama era, was designed, right? So the stimulus was going to be government spending, though, right? The government's going to come in and spend this money, create shovel-ready jobs and all of these kinds of things to jumpstart the economy. The other option is to lower taxes and hope that people will take those taxes and spend them that way. So, two different ways of trying to reach the same goal. They're both kind of focus on that demand side. If you give people more money, they'll go and spend it, right? Right. Back up the top. You've been patiently waiting. Thank you.
Okay, well, he answered one of my questions. I was gonna ask who owns most of our debt, but you answered that question, but I'm curious to know what country or nation has the least amount of debt, and what's gonna happen, like, are people gonna lose jobs if they come, like, trying to pay up? Like, what's
He
know we owe
answered that one.
Yeah,
Usually
I don't know who actually has the least amount of debt. You know, when it comes time to buy a house in your personal finances, I don't know of very many people that can walk in and pay cash. So they take out a mortgage. So the ability of a nation or of a family to leverage debt is an essential tool that you've got to learn. Credit cards are not necessarily the best thing to leverage, but a home mortgage is. Student debt, just don't do what I did and go to law school on it. But it's a good way to leverage that debt for a better future. And so I think that every nation, and the state of Oklahoma has a lot of liabilities. Not only do we have bond indebtedness for things like the capital renovation for transportation infrastructure projects, we also have pension liabilities, about $11 billion in pension liabilities that we're on the hook for. And so, the state, and both for you and as a family and the state as a whole, has to find a way to leverage that, use it the right way, at the right time, not to get it as deep as maybe we are now, but if you don't use some of that, then you can actually hurt your ability to issue debt in the future because of bond ratings, and that's a whole nother fun thing.
All right, we're gonna wrap up this portion of it. Before you guys leave, I've got a gift for each of you, so don't go anywhere. There is still, I am sure, pizza and drinks outside. If you have further
Funding for Great Debates, Power, Politics, and People provided by the John Templeton Foundation through a grant from the Institute for Humane Studies. Facilities provided by Rose State College Professional Training Center.
All right, you're graduating. Your parents are proud, you're relieved, but now what? Where are you going? How about a college where you won't get overwhelmed and still get the full college experience? Great. Let's start at Rose State. Rose State starts you out with a choice from more than 60 degrees and certificate programs. And Rose State offers compelling value in its 2-year degrees. Consider the Rose State graduate feedback in a recent survey. 95% of recent Rose State graduates are employed. 95% would recommend Rose State to a friend. And 97% would get their associate degree if they had to do it all over again. But don't worry. Students at Rose State are so much more than just a number. We'll help you along the way. With smaller class sizes, you can enjoy a hands-on academic lifestyle with a friendly, engaging, and experienced staff. With Oklahoma's first urban community college housing, you can live on campus and enjoy a bustling student life, from sports to an award-winning performing arts center. But at the end of the day, it's all about you and where you want to go. So what are you waiting for? Get started. Rose State College. Going somewhere starts here. All right.